Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 66, published on September 10th, titled ESG Funds That Highlight Labor, and much more. Presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's online site for such information. If your broker doesn't have this information, sign up for free with Morningstar, and you can gain access to company and fund ESG sustainability ratings. Please note, I receive no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. I'm starting with an article titled, Investors Care More About Fair Wages for Workers Than Environmental Issues, ESG Survey Shows. It's by Debbie Carlson and appeared on MarketWatch. The article is in two parts. The first part describes an investor's survey. The second part lists 4 funds that highlight labor. Here are some quotes. Funds that highlight labor. 1. Global X Conscious Companies ETF is the largest of the 4 funds, with $500 million in assets and an annual expense ratio of 0.43%. It's an equal-weighted index that uses ESG metrics to measure how well a company treats all stakeholders. 2. IQ Candriam ESG US Equity ETF is a market cap weighted fund with $484 million in assets and a 0.09% expense ratio. The fund's ESG selection criteria scores companies based on how it treats its customers and employees, a firm's environmental initiatives, and how well suppliers adhere to fair labor standards, among other issues. Tesla is in the top 5 holdings. However, MSCI's ESG ratings considers Tesla a laggard on labor issues. 3. Goldman Sachs Just US Large Cap Equity ETF, that's just JUST, is a tier-weighted index of companies in the Russell 1000, building the index based on an annual survey of business behavior priorities. Companies that treat their workers well, including on worker pay and well-being, get the highest weight. It has $264 million in assets and a 0.2% expense ratio. 4. Humankind US Stock ETF screens companies on 4 Humankind values: the value a firm creates for investors, consumers, employees, and society overall. The index methodology adjusts on the basis of the individual firm's supply chain relationships. It launched in February and has $95 million in assets. It has an expense ratio of 0.11%. End quotes. The next article is titled Sustainability Trends Boost ESG Investing. 5 Green Picks. It's by Sachs analyst Shiroshi Bera. Here are some quotes. Quote, all the stocks sport a Sachs rank number 2 by 1. Microsoft Corporation. This tech giant has been carbon neutral globally since 2012 and commits to being carbon negative by 2030. It is investing $50 million in AI for Earth to accelerate innovation by putting AI in the hands of those working to directly address sustainability challenges. The company's expected earnings growth rate for the current year is 8%, compared with the Sachs computer software industry's projected earnings growth of 2.4%. 2 is EMCOR Group, Inc. The company engages in water system conservation and retrofits, lighting retrofits, solar and wind programs, and more. Its expected earnings growth rate for the current year is 9.4% against the Sachs building products heavy construction industry's projected earnings decline of 1.3%. 3. West Pharmaceutical Services, Inc. designs and produces containment and delivery systems for injectable drugs and healthcare products. The company has received MSCI's highest ESG fund rating of AAA. The company's expected earnings growth rate for the current year is 68.1%, compared with the Sachs medical dental supplies industry's projected earnings growth of 24.2%. 4. Deere and Company manufactures and distributes various equipment. The company launched a smart industrial operating model last year and recycled 28 million pounds of material through remanufacturing. The company sources 32% of its electricity from renewables and has recycled 78% of its wastes. The company's expected earnings growth rate for the current year is more than 100%, compared with the Sachs manufacturing farm equipment industry's projected earnings growth of 31.7%. 5. Texas Instruments Incorporated designs, manufactures, and sells semiconductors to electronics designers and manufacturers. The company's expected earnings growth rate for the current year is 31.7%, compared with the Sachs Semiconductor General Industries projected earnings growth of 22%. End quotes. Now, many ethical and sustainable investors like infrastructure. Here's a recent article titled 3 Infrastructure Stocks to Buy Right Now. It's by Howard Smith and was on Fool.com. Here are some quotes. Looking for solid companies that may get a further boost if the federal infrastructure plan passes? look at these leaders. 1. Nucor. Steelmaker Nucor recently reported its second quarter 2021 results, letting investors know the company had already surpassed its annual record for the net income in just the first half of the year. Nucor's products are used in most every industry. The business is thriving due to several factors. The U.S. economy rebounded from the pandemic, customer inventories have been depleted, and maybe most importantly, steel prices have skyrocketed, and Nucor plans to return at least 40% of net income to shareholders. 2. NextEra Energy is the largest electric utility in the U.S. as measured by retail electricity sales, and it also owns NextEra Energy Resources, a clean energy business that is the world's largest generator of renewable energy from wind and solar. Since 2005, the company has grown earnings per share at a compound annual growth rate of almost 9% and increased dividends per share at an annual rate of almost 10%. NextEra Energy is also pursuing alternative energy projects using green hydrogen. NextEra has given investors guidance that estimates 6 to 8% annual growth in adjusted earnings per share from its 2021 base level through 2023, and approximately 10% annual growth in dividends per share through at least 2022. 3 is Cummins. Another company gradually moving into the green hydrogen space is global power giant Cummins. And while hydrogen technology continues to become a larger part of the company's business, its mobility power solutions are a prime area to benefit in the near term from infrastructure spending. Spending on rail, public transit, ports, and waterways or roads directly affects Cummins' business. Management believes 2021 revenue will grow between 20 and 24% versus 2020. End quotes. Now, this is an interesting article. It's titled, 3 Stocks These ESG Gurus Agree On. It appeared on Forbes.com. Contributor is Guru Focus. Quote, the 2 gurus' firms are known for their commitments to being socially responsible. One is former U.S. Vice President Al Gore, leader of Generation Investment Management, and the second is Jerome Dodson of Parnassus Investments. Now, these stocks are their common holdings as of the second quarter. 1. Synopsys Inc. While Gore established a new 1.2 million share stake in Synopsys during the quarter, Dodson's firm left its position unchanged at 155,573 shares. The Mountain View, California-based company, which focuses on technology for chip design, verification, IP integration, software security, and quality testing, has a $51.2 billion market cap. The Guru Focus value for Synopsys indicates it is significantly overvalued. Synopsys' financial strength and profitability were both rated 8 out of 10 by Guru Focus. 2. Illumina Inc. Parnassus Investments left its holdings of Illumina unchanged in the second quarter with 88,399 shares. Gore reduced his position by 1.09 million shares, that's by 18.68%. Headquartered in San Diego, the medical diagnostics and research company, which focuses on analyzing genetic variations and biological functions, has a market cap of $73.49 billion. The GF value line shows Illumina is modestly overvalued currently. Guru Focus rated Illumina's financial strength 6 out of 10. The company's profitability scored a 9 out of 10 rating. And number 3, Guidewire Software Inc. Gore upped his Guidewire software position by 49.27% in the second quarter, while Dodson's firm established a 150,889 share holding. The San Mateo, California-based software company, which offers a platform for property and casualty insurance carriers, has a $9.78 billion market cap. The GF value shows Guidewire is modestly overvalued currently. Guidewire's financial strength was rated 5 out of 10 by Guru Focus. The company's profitability scored a 6 out of 10 rating, even though its margins and returns are negative and underperform over half its competitors. End quotes. Now some honorable mentions. 1. Title: 4 renewable energy stocks with powerful potential on yahoo.com. The author is Tip Ranks. The stocks are Enphase Energy, NextEra Energy Partners, Beam Global, and Clearway Energy Inc. 2. Title: Our top renewable energy stocks to buy right now, The Motley Fool. Analysts are Matthew DiLallo, Neha Shamaria, and Ruben Greg Brewer. They chose Brookfield Renewable, Total Energies, Royal Dutch Shell, BP, and Renew Energy Global. 3. Titled 3 Green Stocks to Buy and Hold for a Long Time, The Motley Fool UK. Analyst is Monica Prensing. Her picks are Johnson Matthey, the Renewables Infrastructure Group, and BP and Royal Dutch Shell. 4. Title: 3 mutual funds to pick amid the climate tech boom, Nasdaq. From Sachs. Their picks are Calvert Global Energy Solutions Fund Class A, New Alternatives Fund Class A, and Fidelity Select Utilities Portfolio. Well, these are my top news stories with their stock and fund tips. For this podcast, ESG funds that highlight labor, and more. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on September 24th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.